Hi, I'm Champa Patel, and thanks for joining me for this short but sweet chat with Cotality's Peter Carroll to get his takes on the links between policy and climate. Thanks, Peter, for joining us today. You're joining us as a policy program partner this year at Climate Week NYC. Now, we all know it's a critical year for climate action, so I wondered if you could tell us a little bit about how your work is driving forward policy on climate.
Absolutely, and thank you for having me join you today. At Cotality, we believe effective climate policy begins with understanding risk at the most granular level, which is individual properties. Our work empowers federal, state, and local policymakers with property level climate risk modeling to support evidence-based decisions across a wide range of areas, including, for example, smart disaster preparedness and response, clear demonstration of the net benefits of resilient building codes, and zoning policies that discourage high risk development while supporting safer alternatives as examples. We're also tackling complex cross-sector challenges, such as the growing disruption in homeowners insurance markets by drawing on deep expertise in housing, mortgage, insurance, and public sector policy. You can't build effective climate adaptation strategies or guide public investment without knowing exactly which properties, communities, and infrastructure are most vulnerable. That's why Cotality has developed advanced platforms and models that democratize access to climate risk intelligence, giving policymakers the self-service tools they need to make informed, equitable decisions.
Thanks, Peter. Much of the work that you do is in the financial area surrounding the property industry. Could you tell us a little bit about the role finances and property play in driving the net zero transition?
Absolutely. As a global company, Cotality is playing a leading role in the international push to reach net zero greenhouse gas emissions by 2050. Since buildings account for roughly 40% of global emissions, transforming how we power residential properties is essential. In the UK, Cotality's Parity Projects unit, which is a 2025 Ashton Award winner, is working to retrofit 37 million homes in the UK with electrification, weatherization, and clean heating and cooling systems. The most important success factor is ensuring that homeowners, landlords, and renters realize measurable energy savings and energy efficiency gains after each retrofit. To meet this challenge, Cotality has formed a public-private partnership with the UK government to gather detailed property, subsidy, and financial data, deploy sensors that monitor internal and external temperatures and energy use patterns in the family, and build an advanced modeling system that forecasts pre- and post-retrofit energy consumption and costs with less than 0.2% variance, which is key. This level of precision gives property owners and residents a reliable evidence-based assessment of the net benefits of retrofit investments while directly supporting the UK's national net zero targets.
Thanks, Peter. Really fascinating to hear how Cotality is supporting homeowners and working with governments and other stakeholders to drive the net zero transition. To finish, we all know it's a little bit of a challenging context right now, but could you talk a little bit about how policy is influencing the management of climate-related financial risks in the US at the moment?
Yes, in the US, policy responses to climate-related financial risks are mixed. Federal momentum has slowed, but state, local, and private sector efforts are accelerating. Following the repeal of several federal climate finance initiatives in early 2025, including the U.S. Department of Housing and Urban Development's Green and Resilient Retrofit Program, as by way of one example, much of the leadership has shifted to state regulators, municipalities, and market actors. Insurers, lenders, and housing policymakers are being forced to respond to mounting losses and risk concentrations, particularly in disaster-prone areas where coverage is shrinking or unavailable. Notable examples include, but are not limited to, for example, in California, the Sustainable Insurance Roadmap and the first ever Climate and Sustainability Office now requires homeowners insurance carriers to account for climate threats in their underwriting and pricing. At the municipal level, grassroots groups like fire safe councils and municipal fire mitigation programs are reducing exposure and improving community resilience. And in the private sector, commercial banks are increasingly factoring the effects of natural disasters into how they determine mortgage credit risk and collateral value. To support smarter, more localized decision-making, Cotality equips public agencies and financial institutions with property-level climate risk data and modeling tools. This enables more informed zoning, insurance, lending, and retrofit strategies that reflect both long-term risk and community resilience. By closing the data gap, Cotality is helping to translate climate and natural catastrophe science into financial signals so policymakers and private sector leaders can act before risk becomes a crisis.
Thanks, Peter. The work that you all do is so important in supporting implementation of climate action. So we really thank you for your insight.
Well, thank you for having me today. I appreciate it.